Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Thursday. I hope you all had a great week so far. Yesterday, Powell announced a lowering of the interest rate by 0.5% or 50 basis points. As a result, markets went up. But before we look into all of that and how certain predictions that we made during the last couple of episodes came true or did not come true, as usual, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, all the tools that you see in this live stream / video, so the broker, the charting software, the strategy I'm following, and so on, everything is linked in the video description down below. And the one thing I really can recommend, if you haven't done so in the past, is to check out the Elliott Wave principle, which you can actually read online for free when you're using the link in the description down below. I hope we have a fluid enough stream. I see that YouTube is complaining a little bit about the stream quality, so I hope it works still sufficiently enough for you. Yeah, unfortunately in the background I'm currently running a backup script that takes up a little bit of our upload bandwidth. So again, I hope it still is sufficient enough for you to enjoy the stream. If not, you'll just have to tune in tomorrow or next week for another episode that then hopefully runs smoother again. That said, let's jump into it. And as we can see, we have a slightly green start into the day. Yeah, we can see our GameStop $30 covered call options that expire they are September 27th, so they are actually next Friday already, are slightly in plus now. So obviously theta decay is kicking in slowly. So with every day that passes, depending on if the price stays stable, moves down, or doesn't increase too much, the options get cheaper, which means we could buy them back for a profit. Outside of that, not much changed. We actually are going to jump into the charts. And we're going to start with SPY and NASDAQ. So we're going to do it in a different order today. First of all, in SPY, we can now see that we actually reached, like the target areas that we defined previously based on this downwards move here, making this wave 1, wave 2, wave 3, wave 4, and wave 5. However, I want to point out that this fifth wave is already close to, or should be probably close to its end. Now, we had a very strong move here. So there is the possibility that we'll get another push and that we actually exceed the 100% target, but there is not that much upside anymore before we will, in my opinion, before we are going to get the next corrective wave pattern. So if you miss this whole upwards movement, like I did, because most of my funds are tied up in other positions at the moment, then don't jump in because out of FOMO. I mean, make your own decision. Don't not jump in because I'm saying so, but again, based on how I'm seeing the chart or how the pattern looks to me, again, we have wave 1, wave 2, wave 3, wave 4, and in wave 5, we're already close to our upper profit target. We could exceed it. It depends how we subdivide this wave, which is a little bit tricky, but I think we will not exceed it by much, if at all, which means the risk-reward ratio right now isn't that great, unless you plan to hold long-term or longer term, because in that case the outlook would be 1, 2, 3, 4, 5, so 5 terminating anywhere here, and then from there we would get A, B, C or other corrective wave pattern that takes us down, worst case again, into the area of 540, and then from there we would expect the next 5 waves up. So if you get in now, you either have to be very careful with monitoring your position and taking your profits, or you have to have some endurance to basically, as we can see, for a month or two, wait for a corrective pattern to play out, and then wait for the next impulsive pattern to make up again. So personally, I would not jump in right now, but I would wait for the corrective pattern to start, and then rather, based on the usual retracement levels, plan an entry later. And if we look at the NASDAQ, there we have a similar picture once it loads. Yeah, so there we have a similar picture. We now reach the minimum target area for wave 5. We can already with the naked eye roughly see something like 1, 2, 3 probably till here, 4 and 5 in progress. So 1, 2, 3, 4, yeah. So very likely that we're here also getting close to the end of this wave pattern. After all, from the looks of it, this is 1, 2, 3, 4, and we're about to finish wave 5 with a small, I mean, not even a new all-time high, but a high compared to this high that we had previously here, so a little bit above 20,000, but below 20,700, and from there we will get the next corrective wave that again could wipe out a couple thousand points to fall into this area or range here before we continue further upwards. So here again, or here as well, I would not jump in right now because it's possible that we already finished this wave pattern, in which case we would already start our next descent before we continue further up. I'd rather wait a couple of days. You don't have to be invested all the time, and then try to time the next correction end, or get in for the downwards corrections once it's clear that it has begun. Yeah, that much or so much about the Nasdaq and SPY. If we look on GameStop, so we're still moving slightly sideways and slightly lower. Again, I still expect to push down to the $15 range here to potentially finish this corrective pattern and then make our move further up. Time will tell. I am holding on to my positions in the meantime, even if it means that it's an unrealized loss. And even if I mean, to be fully transparent here, sometimes then obviously have the feeling that I'm kind of missing out because my capital is currently locked here when I could have made, bought a couple call options, for example, in SPY or Nasdaq over the last couple of days or last week for this week. Yeah. But I think in the long run, it's still going to be fine. And just like I'm telling you, I also have to pay attention or focus on not letting FOMO getting the better of me. At the end of the day, it's all about patience and believing in your own assessment, and then obviously also here and there being willing to accept when your assessment is wrong. Either way, so GameStop, as said, I think there's still a couple of red days or maybe even weeks, so we can see that potentially this might, if I had to guesstimate, say be another month where we mostly trade downwards, even if it's slowly, and before we finally continue the journey upwards. Now, other than that, most of the markets are in green. One of the positions that are interesting is probably Novavax, so we're still waiting to see either this confirm or turn out as a triangle pattern. So A, B, C, D, E, so as basically the last wave of this corrective pattern, and then we go up, or we already finished the entire corrective pattern and we're going up from somewhere here-ish. Now we see that we have kind of like a support level or like trend line here and then another one here. So if it's a triangle, I expect that we will briefly at least break both of them. If it's not a triangle, then we should go up potentially further, faster or sooner. Either way, it doesn't matter much. So I think while short term there is a potential, 10% drop still possible, long term I see 200 to 500% upside here, or midterm even for the next couple of months, let's say the next year. We'll see if I'll be right here, obviously, in the next couple of months and weeks, or maybe sooner, because if I'm wrong, we go down and obviously I would be proven wrong sooner than that. That said, SMCI also starts to provide the confirmation. Already a while back I pointed out that it looks like we reached the bottom here, considering that multiple projected target areas overlap here. Remains to be seen still. I guess if we were to draw a trend line here, we'd wait for a breakout from the trend line to have something akin to a confirmation and be more convinced or more on the safer side in terms of trusting in the prediction. However, even so even though the pattern looks very clear here, the risk reward ratio here is not as good as in other stocks, like in Novavax, for example. So for me, I still would stay out of it simply because of that. And yeah, so that's that. Now Barnes & Noble Educational. Yeah, so it looks like the correction indeed finished here at the 38.2 level, and we're now forming the next wave 1, wave 2, and then wave 3 upwards. So again, long term, I think worth a buy. with way more upside to come if I'm reading the chart correctly. And what else can we pick here? GameStop we already had. There we're waiting for it to do something. Immersion, yeah. So immersion we're still waiting to either be proven wrong and see a move below 845, or be proven right and start to see the development of a fifth wave move up. With the naked eye, it's possible that we're here seeing the development of another A, B, C, D, E, yeah, like so another triangle pattern. Not 100% sure, but just roughly it could be, in which case we would expect a small spike lower and then we go up. Yeah, but yeah, like time will tell from the overall pattern. I still believe that here we also have way more upside to come. No, if we get a chart to load, I mean, it's still below 30 cents and I still expect it to go lower there so that we actually will be able to buy it below 20 cents at some point in the future. COS has, yeah, like been slipping a little bit. We're still waiting as long as we stay above what did we have here, 652. We are good, then it's possible that we are looking at the next 5 wave upwards impulse, but it's also possible that actually the correction turns out bigger than expected, in which case we would expect to go down to the $5 mark here before we then potentially see our upwards movement, meaning that the few funds that we have tied up in this position will be tied up maybe a little bit longer than, yeah, I mean, I didn't have a horizon here in mind, but they might be tied up a little bit longer. Yeah, NEO had a strong move. Now we see the movement till here. We actually made a new high here, which makes it a little bit tricky because that brings up the question, where's the wave 5 point? But then it's probably here and we're still in the corrective phase. We haven't fully retraced 38.2% yet, so we would expect that we might go a little lower here. We see the 496 mark here at least to finish something akin to an ABC corrective pattern. I mean, there is the option that this is a flat correction. So this is the top, the end of the third wave, and then this is A, B with a new high, and then wave C, in which case we could already be done. However, I think we also have to consider the option that we're actually still in the corrective wave. And there, from the looks of it, I think, I mean, we're looking at an 8-hour chart. The most likely scenario would be 1, 2, 3, 4, 5. Then we get a wave A, B, C, and then we actually get another push down. So I would consider that we potentially will retrace into the area of 475 here, the 50% retracement level, to finish up 1, 2. No, wait, 1, 2, 3. So to finish up wave 4, and then we get wave 5 into the area of $6 here, to finish up 1, 2, 3. So in the $6 area here, then we get another wave 4, and then we get another wave 5 for the ultimate target here. So again, short term, further decline possible by, what's that, 10% roughly, maybe a little bit more. Long term, however, there should still be 20-30% upside. So holding on to it in my case. Now, what's Nvidia doing? Also having a green day. Yeah, even here with the naked eye, we can see 1, 2, 3, 4, and now wave 5 in progress. So we'll get some upside here to finish a 5th wave. You could add an expansion here, so from here to here to here to get your wave 5 target. So the 61.8 and the 100% expansion levels would mark your target area for the 5th wave. And after that, we would expect another corrective pattern down before we then start the next 5 wave impulse. Yeah, we had SMCI. We can look at real estate or real. Yeah, like there we actually bounced at the 50% level. We have what most likely might mark the beginning of the next upwards movement. So if we make those things a little bit smaller, and assuming this is our next wave 1 upwards, we see we retrace 50% till here. So that would need to be something akin to A, B, and C. We might go down a little bit further to the 61.8 retracement if this is indeed the first impulsive move upwards, before we then go further, or we actually finished at the 50% retracement line. Both is possible. You would have to look closer to try to label this corrective pattern properly and predict or label the target areas for the corrective waves to have an additional confirmation. Now, since I don't hold the position here, I don't care that much, to be honest. But from the looks of it, as said, we should potentially not go much lower here. I mean, it's like 5% roughly that we could decrease here, in my opinion, further before we might see the next push up. From the looks of it, again, we finished a nice A, B, C corrective pattern, or a combinative corrective pattern here on the roughly 50% retracement line, and should therefore be in the next 5-wave impulsive pattern upwards. And yeah, that's pretty much it. I think that's really pretty much it. Now, assets, buy and so on. A little bit room upwards. I mean, there could be 1 or 2% still in there for this push, but it's a risky move, and I think it's better to wait out or skip that move and then instead either get puts for the downwards corrective pattern that has to follow, or even wait after that and get then calls for the next one. Either way, that's already going to be it for today, because like there's not much else to cover, and as so often I have a lot of other things on my to-do list. I hope you were able to take something away from this live stream. Don't forget, as always, like, subscribe, and enable notifications so you don't miss out on future episodes. And with that, I'm going to say thank you for stopping by. Have a great rest of the day, and then see you most likely tomorrow again around 5 minutes before market open with another episode of Daily Market